All right, folks, welcome back. A little bit of a different type of presentation style tonight. I'm going to be blending both of my communities. Okay, I have a private mentorship group, which I usually do through a process of becoming structured learners. So you're going from yearning to learning, and hopefully, at your discretion and timing, you'll become an earner. Okay, so yearner, learner, earner. Okay, so those three stages are what I'm going to take you through. It's not going to be an entire year mentorship. I'm only going to do probably 3 or 4 months. But before we get into it, I want you to know that I will not be providing any content to the YouTube channel or my the likelihood of the market turning it in this area and then going lower and attacking the sell side below here, below the relative equal lows here is next, and then this low here. So ultimately we're looking for a run below here for the sell side. Now it might want to go down below here and give a little bit of a retracement if it leaves this portion open. That might want to rally from going over here up to there. I don't think it would do that personally, but it could happen. But it's likely to draw into that old low here. Now how we trade once we get there, that'll be interesting, because I don't know if it's going to accelerate violently to the downside or if we're going to have a sharp retracement higher. I don't know that. Okay, I don't care to know that. Right now, I'm just looking for and submitting to the idea that we're going to keep drawing down on the daily chart. Each daily candle should be expanding lower and reaching into this area. Okay, that's what I'm expecting. That's my ideal scenario. Now, if you look at the daily range here today, we had a little bit of movement above the previous day. So we rallied above Monday's high and then failed and accelerated to the downside. Fell short of just running below these relative equal lows, but I still believe that's where we're likely to go. Had a little bit of consolidation in here, dropped, then we had a nice rally in here. Now, admittedly, listen closely, folks, because this is one of those times where I didn't get it right, and I have no problem telling you. I was expecting this to rally just a little bit higher and maybe flirt with that 43.20 level. I thought that we could get one more spike up into that, and then I was expecting to roll over and go lower. That did not happen. Okay, so let's go into the lower time frame, 15-minute time frame. And here is the midnight hour, New York time, and the opening price there. Notice we only had 1, 2 little moves above that, and that's a really anemic movement for what I was expecting, a little bit more pronounced rally higher. I wanted to see a little bit of a Judas swing, about 20 handles, 15 handles to that effect, like that, and then break down and create something like this. Okay, but we didn't get it. So some of you may be asking, and I believe it was Michelle in the comment section, mentioned that it didn't appear that Power 3 was in effect today. It actually was, but sometimes it's really, really small little movements like this, and it may not be useful to you. But what happens is when you enter the London session, which we do here, at 3 o'clock in the morning, it breaks down relative to New York local time. Okay, so 3 a.m. New York local time. There's a lot of folks in the comment section that are referring to and confused about daylight relative to do here. Well, at 3 o'clock, what happens, it's really, really small little movements like this, and it may not be useful to you. But what happens is when you enter the London session, which we do here, well, at 3 o'clock in the morning, it breaks down relative to New York local time. Okay, so 3 a.m. New York local time. There's a lot of folks in the comment section that are referring to and confused about daylight savings time and such. All of that is resolved if you simply just listen to the instructions I gave every single time I mentioned the time aspect. If you use this little area down here on TradingView and toggle it to New York, and all you gotta do is by clicking it, a window will pop up, scroll to where it says New York, highlight that one, click it, and then you're set. You don't have to worry about it. Don't worry about daylight savings time. Don't worry about, anything. As long as you are aware of what local time is in New York, set a clock on your computer that always tracks the local time in New York, 24/7, 365 days a year. If you do that, you'll never have any confusion about what you should be doing relative to time. Okay? So if you have a small little movement like this, it can throw you off if you're expecting, like I was. I wanted to see a little bit higher rally. So in the morning, I was looking for maybe a little poke above here. Didn't happen. We broke down, retraced back in, bearish order block, and the imbalance, and spent a little bit of time here, and then rolled over right before the 9:30 opening. Okay, and I'm going to talk a little bit about the 8:30 and the 9:30, what times are useful, what are beneficial to your analysis, and what you should be concerned about. Okay, because I know there's a lot of questions about that. But ultimately, we moved into the lunch hour, had a little bit of retracement in here, broke down once more, and then aggressive selling, really aggressive selling into the PM session, into the close of the day. If you look at the opening price at midnight local time, New York midnight local time, that's what this here. That's that opening price. This price is useful for trading the London session. That's 2 o'clock and 5 o'clock in the morning, New York. New York local time. And it helps me, New York local time, for trading the London session. That's 2 o'clock and 5 o'clock in the morning, New York local time. And it helps me frame the power 3 for the daily range. If I'm bearish, I'm looking for something to frame local time. And it helps me frame the power 3 for the daily range. If I'm bearish, I'm looking for something to rally above that opening price in London. That's my ideal scenario. I'm looking for that personally. As you can see, opening price in London. If I'm bearish, I'm looking for something to rally above that opening price in London. That's my ideal scenario. I'm looking for that personally. As you can see, we really didn't get much of that today. It was extremely heavy and just wilted and went lower. Sometimes that's going to happen, folks, and wilted and went lower. Sometimes that's going to happen, folks. And in this instance, I missed a setup. I don't get in what I'm thinking I'm expecting to see. So I'm human. You're human. You're going to look at something in the chart and you're going to have something that is your favorite model, whatever pattern it is that you're looking for. And it may not even be my stuff. Say you're just here casually watching. You're probably nodding your head saying, yeah, I've had lots of instances where I was looking for my particular setup and it didn't materialize and it went the other way without me. You're going to miss moves. You're going to misinterpret it. You're going to read it wrong. That's going to happen. And that's why you have to use a stop loss. That's why you have to be controlled about how many times you go into the marketplace. And you also have to have some measure of flexibility. And that comes with experience. You're not going to always be able to see that this isn't going to go up for you initially. It's just going to just wilt and go the other direction. So when we get into the 8:30 hour, and I have the lines really light here because I want to be able to show where the highs and the lows were on the respective candles. So this is the 8:30 and this is the 12 a.m. midnight candle at New York. So this is New York, and this is midnight New York. So there's a distinction there. The beginning of the day, this is where I look for the daily range power 3 setup and or the ideal scenario. If I'm bearish, I want to see something rally above that opening price. If I'm bullish, I want to see it decline below that opening price. Okay. That's pretty much the basis for the opening price at midnight. It may not be a factor for you like it is here. It's not much of a use, for anything except for, well, here it opened and it just basically went lower from there. At 8:30, the same thing. I look for those types of scenarios. I'm looking for weaker prices. I'm looking for it to trade lower. And does it rally above the 8:30 opening price? It never does. It's too heavy. It just wilts. Okay, it keeps going lower. Now, the opening price at 8:30, I use that for, again, power 3 for the New York session. The same thought process that I'm using for the opening price at midnight in New York time, that opening price, if I'm bearish, I want to see a move above that. That's what I dub a Judas swing, a false rally, or a suspect rally. I usually like to fade those types of moves. As it goes up, I sell right into it. And it's scary for someone that doesn't understand what they're looking at. But if you know what you're looking for, and it takes a lot of experience and learning and back testing and seeing things, you'll be able to do those types of things over time. But that same element of trying to look for a short above that opening price in New York when I'm bearish, I would expect the same thing to happen for the New York session, or rally above that opening price at 8:30 and then decline. So I'm looking for something to rally above that and fade it, but it isn't doing it today. So now look what's occurring here. This is really important that you understand this part of it. You know that I've been bearish. I've made it public knowledge here. Did we rally above the opening price at midnight? No. Did we rally above the opening price at 8:30? No. And we're bearish. What does that indicate to you? Obviously, with the benefit of hindsight, it's extremely bearish. It can't even rally to a short-term premium above the opening price at key levels and time. So we have an extremely heavy bearish market. So it's not going to give us these stunning little short-term rallies that we can fade. It's just going to stay heavy, and either you get in where you can find small little pockets of imbalance, or you miss the move entirely. Now, as it happens today, my wife went on a trip. I had to take her to the airport. I was only able to capture $2,000 worth of movement in the S&P E-mini. That's the only thing I could capture. When I got back, I didn't participate in the afternoon, and looking at it now, I missed a really, really huge opportunity. There was no trading whatsoever in the afternoon. My money was made short on E-mini S&P in the morning session. And that's all I had for today. If I would have just held on to what I had in the morning, I could have done around $12,000 today alone. But I didn't hold on to it. I had other things to take care of. And that's the reality of things. Real life creeps in. It's going to happen. But for those of you that are trying to learn these concepts, these types of movements are going to be very frustrating in the early stages of your development, because you're going to feel like they're changing something. They're aware of this. This stuff goes on a lot. It happens in the futures markets, like commodities like corn, soybeans, gold, oil, stocks. Sometimes the markets are just simply too heavy, and they're not going to rally for you, to short into. It doesn't mean that they've changed anything. It doesn't mean that the concepts don't work. It just means that this is a market that is extremely bearish. And when it's extremely bearish, you have to trade it differently. And I'll show you what I mean by that here. And I'm not trying to inspire much outside of the mentorship, but I know some of you have asked this in the comment section. Plus, it helps my own personal group to understand this as well. So it'll be a little bit of a refresher for them. All right, so here's the London Open setup. This was the move that set up the only real sound entry, in my opinion, that took place today. Here. This displacement, fair value gap, rallies up, bearish order block, fair value gap, runs into it, and then you hold it. Because at the microstructure, shift below the short-term low, the imbalance, we run back up in. This imbalance here, remember what I taught you about this? This one here can be traded to on a spike. It can get up into there, but your entry is on the lower fair value gap. Do you see the logic working here? You are going to use a stop that's going to allow for the market trading up into this one. So you may not like that much risk. You may not be able to take this trade. That's all part of this game. But you can trade a micro, or maybe you could. I shouldn't say that you can. I don't know what all of your risk parameters are, what you can work with in terms of margin. But while you're learning in paper trading, obviously, you can use anything because it's all hypothetical money and you're learning the skill set. But the rules are still sticking to what I gave you in terms of the logic. If you have two fair value gaps, you're using this as the entry and you're using this as the risk. Don't always assume that you can get up here and get the best entry, because it never went there. See that? So it's things like this. This is what I refer to as a signature in price action. These are algorithmic things that repeat, but you have to have the discernment and experience to know when it's likely to occur, when it isn't likely to occur. So anyway, let's talk a little bit about the 8:30 time period and 9:30. All right, so here's 8:30. Got the imbalance here after 8:30. Now, normally with the model, I'm teaching you to look for something to the left prior to 8:30. Some kind of short-term high. We want to see it rally up. And using opening price at 8:30, which is here. We want to see it rally above that, run some stops, then break down and create this type of scenario where it has displacement and a imbalance. It rallies back up into the imbalance and sells off. The model doesn't exist in today's price action on the 5-minute chart. It doesn't give it to you there. Okay, so I'm going to give you coaching, if you will, to kind of like show you what was in price and some of the things I was looking at to help get in sync with the move, but I didn't ride the whole thing out. Okay, and believe me, I'm looking at this today wishing I just would have had at least one of the 2 contracts I had on still and just let it run, and I could have done, about $8,000 or so. But I didn't do it. Okay, I was leaving, I was taking my wife to the airport, and it's just better if you're not going to be in front of the charts and anything can happen. I could get delayed out there. Phone doesn't connect with the broker. It's just better just to be away. If you're not going to be paying attention to the marketplace, just simply completely close the entire position. Also, I'll throw this in here too. Shortly before I started doing the recording here, I saw a question, do I ever hold overnight in these current conditions? I stopped holding overnight like 24 hours years ago. We had a lot of things going on in the world that changed my trust. Just like I used to hold things over the weekend and expect continuation going into the opening on Sunday and Monday, I no longer hold over the weekend. So I am 100% in a session or a day and out before the close. Like I'm not holding 24 hours. I'm not holding 12 hours. I'm not doing those types of positions. Typically my trade is anywhere between 90 minutes to 2 hours maximum. That's about the length of time that I'm holding, and I'm looking to take mine and get out and then reassess things because there's just too much risk right now in the marketplace, all asset classes, and things are now starting to get a little wild, and it could get a little bit more wilder. Okay, but the 5-minute chart has the imbalance in here. We saw that run, and the model, I want to see it run above the opening price at 8:30. The opening price at 8:30 is the New York Sessions opening price. Now, don't get confused with the New York Midnight Candles opening price, because the New York Association in the name, New York Session is the 8:30 to 11 time period, New York local time. So I'm looking for this framework to offer Power 3, which is a fractal element of accumulation, manipulation, and distribution. That's what Power 3, the 3 things that framework to offer Power 3. So the 8:30 to 11 time period, New York local time. So I'm looking for this framework to offer Power 3, which is a fractal element of accumulation, manipulation, and distribution. That's what Power 3, the 3 things that is empowering you is understanding those 3 elements. Accumulation, what's accumulating? Short positions. Okay. Why? Because it's bearish. So smart money would accumulate short positions, then anticipate manipulation above the opening price. They would assume more short positions there. Then it starts to go the other direction, and they distribute their short positions at some important low that we're able to forecast. And obviously it's relative to those daily equal lows and old daily lows and projections with the fib. All those ideas come to mind in concert with, in agreement as well, with time of day. Okay, so we're looking at a movement down into around the lunch hour beginning at noon. Okay, it creates the important low there, and we have a retracement during the lunch hour. One more time it punches above the high here, then it breaks down, consolidates, starts to create 1, 2, 3, and then you can expect continuation going into the afternoon session. We're not going to talk about the afternoon session because honestly, I wasn't participating in it, and it is what it is. I'm familiar with this morning because I had some horses in the race today. Okay, so we'll start getting a little bit more detail here. Here we have the 4-minute chart. The imbalance here, this is one, again, that is not rallying above the opening price at 8:30. Now it's showing 8:28, but that's because I'm showing a 4-minute chart. So don't let that confuse you. But the opening price, again, never got traded above at the 8:30 candle. So whatever that opening price is at 8:30, you extend that out in time, and you want to see that rally above. Now, when you have this expectation, the other aspect of time is the 9:30 opening. That's when the equity market or stocks themselves start trading their New York session. So what happens at 9:30? What am I expecting at 9:30? Well, number one, 9:30 is just when the opening occurs and there's initial volatility. Now it could be whipsaw where it can go up and down real short term and go both directions in a small range. Sometimes it could be a really large range and clear both sides of the buy and sell, and then really large short term and go both directions in a small when the opening occurs and there's initial volatility. Now it could be whipsaw where it can go up and down real short term and go both directions in a small range. Sometimes it could be a really large range and clear both sides of the buy and sell. And then whatever the real move is going to be for the day, we wait for that to unfold. Today, we can see at 9:30, it just starts to run lower. It doesn't give us a rally at all. So it just starts to speed up what's already in motion from 3 o'clock in the morning during the London Open session. So at 9:30, all it does is just start to accelerate down. Okay, and the same idea is being shown on a 3-minute chart. You can see here that little imbalance gets a little bit more refined, trades up into it rather handsomely, breaks down, and here's another fair value gap with a bearish order block. Now this is one in here where it's useful because you have a little bit more insight as to what it's doing. It's too heavy. It's not likely to rally. There's no reason to look to go long. Start looking for reasons to get short. And anytime you get an imbalance and we're above those relative equal lows on the daily chart, because it's going to draw down into that. That's the heaviness objective. Okay. Why the prices keep going lower, 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 lower is because they're gravitating towards those relative equal lows on the daily chart. Okay. So go back to the chart where I mentioned in this video and showed the daily chart. I have that little blue line. That's where price is being drawn to. Okay. The algorithm is marching every minute, every hour, every day to that level. How long does it take to get there? I don't know that. But I mentioned in my group that I didn't want to see it happen like we're seeing it right now, because it's too fast and it doesn't give it a lot of opportunities to get in with it and ride it. So you either have to have entries like this, which unfortunately isn't scalable with the model I've shared publicly, but I do have obviously opportunities to go over it like this and show you that how you can still use the idea of the fair value gap to get in with it, but you're going to have to leave out the element of a rally above the opening price at 8:30, and 9:30 just creates a lot of volatility. Okay, the initial surge in the New York session as the stocks begin to trade, basically. So, as a recap here, before I go into the next slide, midnight New York time, that opening price, I used that to trade the London Open session. That's 2 o'clock to 5 o'clock in the morning. And also to help frame the idea, like say I sleep through London, which is 90% of the time what I do today. Like I don't do a lot of London session trading. And because of that, when I wake up and I'm looking at the market around 7 o'clock in the morning or so, I'm looking at what has happened overnight. And did we create a scenario that I would be looking to trade if I was awake during London? If it happens, then I know that I'm really built in with an advantage on the daily bias, because if I'm bearish and it creates a rally above the opening price, midnight time, New York, and it creates that rally, that little Judas swing that I've explained many times already, and it starts to decline and I'm below that around 7 o'clock in the morning, I know that I'm likely to create another little short-term rally, but it would be above, ideally above the opening price at 8:30. But it may not do that. And price just remained heavy below both opening prices at midnight New York local time and 8:30 New York local time. So everything was extremely bearish, and it was just so heavy it could not mount any meaningful rallies. Many times in my early development, I got crushed on days like this, where it felt like, okay, it's too low now. It can't just keep going lower. So I'm going to try to buy it now, because indicators told me that we're oversold. 1992, 1993, 1994, I blew account after account after account doing that. And it's frustrating. Now, obviously, with 3 decades of experience behind me, I know what it's trying to do and where it's trying to get to. And it's getting there in a really fast rate of speed. Now, obviously, you can get there a lot faster than that, but I don't want to do that, because it gives no real opportunity for me to engage and participate in. And it doesn't give you, as the student, to engage also with your demo or paper trading account to practice. But as real life sometimes is, it's unfair. Okay? It doesn't give us what we want. Sometimes our expectations and our wants are denied. And in today's climate, that is not popular. That's why this market and trading these markets is very, very difficult, especially for like the millennials. Okay. That ideal, perfect, always come exactly as I expected, sometimes is denied. And either you accept that and navigate the markets with imperfection and without the ideal scenario for your model, or you're comfortable with just letting go and not doing anything and being accepting when it comes to big moves and you can't participate in it. There's lots of moves, folks, over the last 30 years that I missed that were huge, big, huge moves. For instance, Bitcoin. I called that thing at 7,500 to 20,000. And then right before 20,000, I said it wasn't going to 20,000. It was 19,700. And I said it's going to go to 6,000. And everybody laughed and went down. And I said it was going to go to 3,000, but it went down to like 32. And then I think a couple times I had it wrong publicly. And then I said that we would go to 20,000 by Christmas. I think it was 2020. And then I said 30,000 by New Year's, and I was off by about 18 hours. It went to 30,000 on the 2nd, I believe it was, on January 2021. And then I said 55,000 and 66,000. That was about as far as I could see it go. And we went just a little bit above 66,000 and hasn't been doing much since. But I didn't do anything with that, with real money. So I missed a huge run in something that would have otherwise paid out a lot of money. And I've missed a lot of moves in the futures markets and a lot of commodities. I missed a lot of stock moves, while I was teaching Forex. There's a lot of stock movement in index futures that I didn't participate in. Guess what? It's okay. I'm able to still find trades. I'm not starving. And that's the reality. You're going to have to come to terms and the grip with you have no way of participating in every single move. And don't think that you're going to find every big move. You're not going to participate in every single price swing. You're not going to, folks. I miss moves. You're going to miss moves. And it's okay. It's part of this game. This business is going to still run and do the same things we're looking for all the time. And you're not going to participate in every move. Okay? So give yourself the permission, okay, to be human. You're going to do it wrong sometimes. You're going to see it for something it's not. And you're going to miss that big move. I had a little piece of this today, but I didn't get the whole thing. I wish I would have, but I didn't. And it's okay. I forgive myself for being a good husband, taking my wife to the airport. I know this is all too much stuff and you don't care. Some of you like to say those things in the comments. Get to the point. The point is, you do this, you're going to have these elements creep in. And how are you going to deal with it? You're going to get mad, go on social media and blurt out and curse and say, these markets suck. No, that's not what you should be doing. You should just reason with yourself ahead of time and say, okay, I'm not going to be able to do everything. I'm not going to participate in every single move. And this is what happens sometimes. It doesn't mean the model's broken. I promise you. And over the next couple of weeks, you're going to see the model delivering like it's done in the past. And it's fine. There's going to be times when the market shifts in and out, and the market structure is just too overwhelmingly bullish or too overwhelmingly bearish. In this instance, the bearishness I gave you guys just was a lot more bearish than the model would permit for entry. But you can see there's fair value gaps in here you can use to participate. Dropping down to 2-minute chart, you see again, refined in real nice here. And then once more in here. And then drop down to that noon time, creating an important low, which is what I taught you in this mentorship already. And that 2-minute imbalance you can see on 1-minute chart here and here. Real nice delivery there. And these are just simple little imbalances to get in sync with what is already in motion, not needing to see it rally above the 830 opening price because it's not likely to. So it takes a little bit of courage to get in here and trade these types of setups, but that's what you do. Or you don't do anything and you just tape read. You watch it when it does it and say, okay, I would like to see it drop here. And does it drop? Yes. And you study that. Then get another fair value gap in here that's not highlighted and it rallies up to a fair shorter block and sells off. And your stop is above here. And just because it goes down lower doesn't mean jam your stop loss to here, because that's what happens. You need to have time and price behind you before you start moving your stop loss. And ultimately trades obviously lower into that noon time. All right, so I think that's going to be it. The next episode on Thursday, I'm going to show you a couple things inside the trading platform on TradingView that I think are useful. That answers a few things. And one of the students made mention that could I literally go in and show how to set up the Fibonacci. So I thought it was kind of simple already, but Obviously, some of you are really, really new and you're not familiar with the TradingView platform. So I'm going to add that at the end of the video on Thursday coming up. Okay, so that way it's at the end, and anybody that already knows how to do it, they don't have to go through and watch all that stuff. But I'll give you another teaching and lesson, obviously, on Thursday. And until I talk to you then, be safe.